Hi, everyone. Welcome back to Wade into Wealth. I'm Chuck Wade. This is my much better looking younger brother, Ethan, and we are the Wade brothers from the Wade Group here at Brighton Securities in Rochester, New York. Thanks for being with us. We appreciate you joining us on this journey to financial wellness. And we're going to talk today about credit scores. But first, we want to ask a favor. If you like this podcast, if you're finding value of some sort in it, please leave a review, subscribe. Feel free to share it with someone else that you think might find it of interest or value. We do appreciate that. So that's our spiel before we get into the meat and potatoes. Let's talk about credit scores today.
Yes, the ever-exciting credit score.
Not really, but something that is really important.
It's important. It's really important.
And I think it's one of those things that we don't think about it until you need to.
Yeah, until you go get a mortgage
to.
or a new car, or you try to sign up for the TJ Maxx store credit card.
Yeah, TJ Maxx.
It's the first one that came. You know, I'm
First
so
one
ingrained to TJX Companies, which is the
Right.
parent company of all of those. That, being TJ Maxx, Marshalls, Home Goods. Yeah, that
It's very 2010 of you.
TJ Maxx.
Yeah.
I mean, Brennan goes all the time.
Yeah.
Griffin knows TJ Maxx. He knows.
And Griffin is how old?
3.
Griffin is 3. and
He
knows
assumes that
TJ.
anyone who leaves the neighborhood is going to Target. That doesn't matter where they're going. Oh, they're going to Target.
Because to him, he thinks when you leave the house, you're
You
going
only
to
go to
Target.
Target.
Only
Yeah,
Target.
yeah. So you're
Okay.
welcome for your plug, Target.
Yeah, happy sales.
Mm-hmm.
So yes, credit scores, something that is really important, and I think it's something that a few months back when we talked about real estate, we had John Milano from Genesee Regional Bank. He talked about how important your credit score is when you go to apply for a mortgage, when you go to refinance a mortgage or an existing loan. It is super important. It is the metric that all lenders use to evaluate whether or not you could pay the loan back, or what you'll be approved at, or what kind of interest rate you'll get. So very important. We're going to talk today about what credit scores are, what the most important factors are in terms of managing your credit score, how they're calculated, and then some action items and steps we can take at the end to get a good grip on credit scores. So we kind of touched upon why they're so important. Is there anything we missed there?
No, just that a credit score it's a 3-digit number, ranges from 300 up to, I believe the highest is 850.
That is correct.
And it's just that score, as you had mentioned, is the indicator of how likely you are to repay borrowed money or your bills. It's very simple. They may check that when you go, if you're applying for a new job. They'll check it any time that you're applying for credit. Think of getting a mortgage, a new car, whether you're leasing a car, a new credit card.
Mhm.
And obviously, the higher your score, the more likely you are to pay your bills, and thus you'll probably get different offers that someone who maybe has a credit score of 500 may have. You may get 0% interest offers. You may get offers that just carry much more by way of benefits, because the credit company perceives you to be a less risky individual in their eyes.
Yeah, and at the one of the things with larger loans that's most important is if you're going to buy a house and you go to get pre-approved, well, the amount you can be pre-approved for is entirely dependent on your credit score and your credit history. So
Yes.
Best credit score, 760 and above. That means you're likely to be qualified for the best rates. So the lowest interest rates, your cost of the loan will be the lowest one.
So let's talk about that for a while,
Yeah.
right? Because the interest rate is what you have to pay the credit company based on how risky you are. So if you are a
Right.
less risky individual or a less risky couple, you will be able to pay less interest because you're not carrying more risk. The riskier you are, the credit company has to be compensated for that. And their way of being compensated is by charging you a much higher interest rate.
Right. So 760 and above, that would be considered very good or excellent. Anything from 700 to 760 is considered good. 700 to 620 is average. And then anything below that, below 620, would be considered below average, which just means there's a variety of factors that go into calculating credit scores. And what are some of these things that go in? Because there's a handful of factors, and they all kind of hold different weight.
Yeah, the biggest one is your payment history.
Yep.
What do we mean by that? I mean paying your bills on time. They track it, whether you pay your mortgage late every month, if you pay it late here and there, or if you pay it on time every single month. They know that. And the biggest indicator to your credit score, the biggest contributor, is do you pay your bills on time?
The biggest contributor and potential detractor
Absolutely.
is the payment history. And you can go in, if you go into your credit report, we'll get to credit report later where you can get one. You can get one free every year. Most credit card companies will provide them to you now as well. If you go into your credit report and dig deep enough, you can see every payment that you have made.
Right.
And whether it has been on time or not.
And they track, you start to get a streak for how many payments you've made in a row and on time.
Yeah. So if you are late, even once,
they notice.
Now, late is not your payment is due and you're 2 days overdue.
Right. Usually there's a grace period.
Late is missing, late would be a month late. Late would be missing a payment for a month. Late is not, we've all got, you've gotten them where it says, hey, your payment is past due. And you're like, all right, I forgot to make that payment a day or two ago.
It's not going to ding as long as you pay it.
As long as
it won't ding you, as long as you get, I remember, I think, we had a leased vehicle once and I missed the payment and I called it it was like a day late. And I was, I was obviously worried about that. And they said, no, you really have 15 more days before there's going to be any, notification on that. So you do have a little bit of a buffer. Don't flirt with it. Just pay your bills on time.
Yeah.
Tend to work
before you get the phone call threatening fire and brimstone raining down on you from the lender.
Yeah.
If you don't pay this.
Avoid that if possible. But the next biggest one, though, is your credit usage.
Yeah.
So if you get a credit card, you get a credit limit.
Talked about this last week with the debt ceiling.
Yeah.
And the U.S. government's inability to manage their own credit. But yeah, you have a limit.
Yep. And so typically the credit reporting agencies want your usage of your credit limit to be 30% or less. So if you have a credit card that has a $10,000 credit limit, that means not carrying a balance more than $3,000 on that.
Right.
If that's, now they don't mean you have a one-time payment of $5,000, you turn around and pay that off. Not what they're talking about. They're talking about carrying a larger balance on a regular basis. Ideally, you want to keep that below 30%. That's a major contributor to your credit score.
Or if you have multiple credit cards, you'll see that scenario where someone has multiple credit cards. You've got multiple credit cards, and let's say in total your balance, your limit is $20,000. You really want to be below about $6,000.
There you go. Good math.
Total. Thank you very little.
Good math.
Math in my head, not my biggest strength.
I know. I was going to double check you on that.
You were waiting. You were like, oh, is he going to get
ready.
this right? You were waiting. This is like when I was asking June what 1 + 2 is today. I'm like waiting to see if she can do it. And you're like, let's see if we can get it right.
Griffin would know that.
Yeah, your son would know, the math savant. Yeah. He would know. But so, yeah, you want to keep that under $6,000. Now, that could be that on one card you have a $5,000 balance and it's a $7,000 credit limit. Mm-hmm. That's okay. They're looking at the total amount.
Yeah, the bigger picture of what you have going on.
Keeping it below 30% is something that is really beneficial. That has a pretty high impact as well. The two biggest impacts are going to be your payment history and your debt usage, and then oldest credit line. So what a bank or lender is looking for is how long have you had credit?
Right.
And so I remember the first credit card I ever got was, I lived in Charlottesville, Virginia. It was Wachovia at the time.
Yeah, which is now Wells Fargo.
Yeah. So I went to Wachovia, opened a checking account there, because what I was doing is I was literally sending my paychecks from the TV station in Virginia. I would mail it back to mom and dad. And they would
put it into TVFCU,
to put it into the Tonawanda
Valley Federal Credit Union,
in Batavia. Now I did that like twice and realized like this is so messed up.
Yeah,
just go to a bank. So I went to a bank.
That's funny. I didn't know that. Yeah, that's really funny.
Went to a bank. It's really bad. It's
awful. Everyone finds their own way eventually. You just had to find it in Virginia.
It was just lazy, but
it wasn't, because you had to mail a letter to physically deposit your check. Also, think about how now you can deposit a check in your bank account with the picture on your cell phone.
Picture.
Technology has come a long way to make our lives easier.
Just a picture.
You really could have used that when you were in Virginia.
Would have been helpful. But So I go to Wachovia, and they gave me a credit card.
Yep.
I
Look
don't
at
know, it
that.
had like a $500 limit on it.
Sure.
This was,
Yeah.
I was 22,
Yeah.
23, younger actually.
You clearly had them fooled. They must not
Yeah,
have known that you were
right.
mailing checks
Well,
to your
that's
mom
why
and
they
dad
gave
for
me one with a
deposit.
$500 limit. So anyway, I go. Now, that credit line is still open today.
Mhm.
I still have a Wells Fargo credit card. I don't really use it, but I keep it open, and
Sure.
that shows. It says Wells Fargo, it's, I don't know, 16, 17 years old
Yep.
now. So that the history of your credit is fairly important as well. We'd call that like a moderate impact on your credit score.
Right.
So and that goes into not necessarily why you would close a credit card either,
Yeah.
especially if you're not using it. It really doesn't hurt you to keep it open unless you're paying a high annual fee on it to keep
That
it open.
or you can't keep all of your stuff organized and you're at risk for getting getting hacked. But we'll talk about some strategies towards the end of this of how to prevent.
So oldest credit line, what's next?
What, hard or soft inquiries?
Recent inquiries, yes.
Yeah. So
within the
harder
last couple of years.
harder inquiries that's going to be you're going for a more serious purchase.
Yeah. So a soft inquiry would be like you're checking your rate online. You want to consolidate a loan, and so you Google loan consolidation, and you type your numbers in, and they give you a potential rate.
Mm-hmm.
It's called a soft inquiry. It doesn't actually go to your credit report. The credit reporting agencies aren't seeing that somebody checked your credit. Now, you're going to buy a car. You're sitting in there with the person at the dealership, and they run your credit. That's a hard credit inquiry.
Yep.
You go to apply for a mortgage, get pre-qualified. That's a hard credit inquiry. When a lender,
And typically, you're going to get a notification that
right?
somebody had ran your credit.
When a lender is doing it, that's called a hard inquiry. If you start to get 5 or 6 of those within a couple year period, that can have a negative impact because a lender's saying, why are you trying to obtain all this credit?
Well, no, you're also just taking on more credit and
Right.
more potentially more debt in your life in that
Right.
scenario as well.
Yeah. So hard versus soft inquiries with respect to your credit report.
And so that counts, but that's a low
Yeah.
impact. The two biggest, as you had mentioned, are pay your bills on time and the amount of credit that you're
Yeah.
using based on the available funds to you.
Yeah. Other factors would be new accounts within 2 years, which kind of goes along with hard inquiries versus soft
Yep.
inquiries. And then the available credit that you have to you, which would be how much credit do you have? It's not necessarily how much you're using, but how much is available to
Mhm.
you. Do you only have one credit card with a $2,000 limit? If you don't have a mortgage or anything along those lines, well, you don't have that much available credit.
Sure. But it
Where-
also shows if you have multiple lines, showing that you're able to manage
Right.
your finances in a fine way if your credit usage is not, overly high or past that 30% mark.
Yeah. So moving on, let's say you want to raise your credit score.
Yeah, well, it's kind of like you want to get healthier. What's the first thing you're going to do? You're going to want to get your blood work done.
Yeah.
Right? You're going to want to see, where do I need to focus on? Do I need to focus on getting my cholesterol lower? What do I have to do? So the first thing is try to get a credit report for yourself. And you're allowed one free annual report. I can never remember where you
Annualcreditreport.com. Now, the other thing is, if you have a credit card, any one of these services now provides, most of them provide you with your credit report for free. They'll provide you with your FICO score, and they'll provide you, which is like an average of your credit scores from the various rating agencies, and they'll provide you with a credit report if you want almost at any time. It's not that hard to get one, but get one.
Yeah, see where you need to work on. And even sites like Credit Karma will point out areas
absolutely.
of this is a spot that you could work on, whether it's you need a longer payment history, you need to
Right.
pay your bills on time a little bit more. They'll highlight areas for you to be able to go in and make those improvements. And certainly if you're carrying large credit card debt or you're past that 30% threshold of your available credit, paying that down is going to help you.
Pay your credit card debt down. That is almost always going to be the first thing to do
I mean, that's helpful for your credit score, but that's also helpful for you.
for your financial
And-
health
and
and
financial
wellness and
life.
well-being, right? Yeah, absolutely. So reduce your debt. Something I want to touch on quickly is, because I didn't know this until, relatively recently, is the idea of what's called revolving debt versus fixed debt. So fixed debt would be an auto loan. Your car payment is the same every month. It doesn't go up. Your balance doesn't go up. Like you don't put more on your car balance.
Yep.
So that would be fixed. Revolving debt would be a credit card. So your payment can change based upon your balance, but your balance can change too if you are putting more on. So that debt limit can revolve. Revolving credit should be the first thing you're looking to pay down. Pay your credit cards down.
Yeah.
That's it.
Pay down the variable credit. Makes sense.
Pay your credit cards down first. Avoid hard inquiries. Now, if you need one.
Yeah, that doesn't mean don't go get a mortgage if you want to buy a house or go get a car if you need it. But don't just make unnecessary hard inquiries because you're thinking, well, I want to go try to get this car and then try to go get this car and just running up hard inquiries.
You don't have to go get pre-approved by 5 lenders.
Right, yeah.
You can go to 1 or 2, totally fine, but you don't have to buy 5 lenders. And really what you'll notice is maybe that's 5 or 10 points for every one of those.
Yeah.
You'll see as you start to rack them up.
But 5 or 10 points, while that may be very modest in the grand scheme of things, that starts to help. It creates that snowball effect that turns into a little ball of snow that when you roll it down the hill becomes the base of your snowman.
We're getting there. It's mid-October. We're getting there. Be making those snowmen soon.
Getting darker out sooner.
I don't love it.
That's life.
I don't love it, but this is why I'm trying to learn to ski.
There you go.
Yeah. Sometime I'll tell you the story of me sliding down a slope at Swain last year. Well, I'll tell it now. Sliding down the slope at Swain.
Why wait?
Under the ski lift because I was just too afraid that I was going to fall and blow out a knee.
Well, you're lucky that now I've never skied. I don't know how. I imagine the ski lifts are pretty high off the ground, but you're short enough, so I imagine you can fit below almost anything.
Oh yeah. No, it was just I got to the bottom. And Liz is like, everyone on the ski lift saw you. I'm like, yeah, I don't care. I don't care. I got down the hill, didn't I?
Yeah, it's a weight.
And I wasn't blowing
a weight trait. Yeah, I don't care.
I wasn't blowing gonna blow a knee out. I was not prepared to ski this. The irony is that our then 7-year-old daughter,
she did it.
She went up.
Yeah,
fearless.
Yeah, fearless.
Yeah, no, she's gone. So
it's good.
Don't close credit cards with no balance. Sometimes you think of it this like I'm gonna pay this credit card off and I'm gonna cut that credit card up and I'm closing it. Don't do that because that can remove longer open credit lines. So that can have a negative impact. Also, it's going to reduce your available credit.
Now, mind you, we're specifically talking about your credit report. So if you know yourself and once you pay off a credit card, if you know, while I have it, it's in my wallet, I will put a balance back on it.
Okay, yes.
And for your overall financial health, if closing that is going to prevent you from going back into debt, then don't make a decision solely based on this will help my credit score. We're talking about that specifically, ways and tips to be able to do that. But in the broader scheme of things, if you know yourself and if having that credit card in your wallet is likely to end up in you putting a balance back on it, then you have to know yourself, cut it up, close it, but remember...
Or cut it up and keep it open. Get rid of it. But
look
at
that. So a solution. Card. A solution. This is why there's 2 of us.
I was just say, I mean, you're making me sound like a complete idiot here. Like, oh, we got a solution from this guy now.
Well, look at that. We got 2 of us together.
Not acknowledging it.
We got it.
Not acknowledging it.
Moving on. So what is
flying off the rails?
Ways in which and this is something that I think is really, really important. I think you would agree with me. And it's free. Because we talk about in a world where our information is everywhere.
Yeah.
Hacking is a problem. And the one thing you don't want is you don't want people hacking your information to open up a new credit card in your name, run up all these debts that you haven't done. I mean, if you're going to run up debt, at least you should enjoy, the fruits of what has come from that.
At least you be the one running the debt up.
Yeah, right. But in this, one thing that is easily overlooked is putting on a credit freeze.
Yep.
And so what does a credit freeze do? It's free. It will be a little bit of a pain, but in
totally
our view,
worth it.
We accept that pain to know and have the peace of mind that no one else can open a credit card or a card in your name without you doing it. So what a credit freeze does is it freezes your credit, as the name would suggest, so that no one can run a hard inquiry against your credit report. And if someone can't run an inquiry against your report, they're not going to give you a credit card.
Right. Yeah, so all you do is it's TransUnion, Experian, and Equifax.
You have to do it for all three. You can't just do it
Yep.
for one. You have to do it for all three credit reporting agencies.
You do. And each one is different. They will, because
Yep.
your credit, they're going to use your social security number to run it, to run a credit report. So
Assume that everyone, that
Just
your
assume
social
they
security
have it.
number's out there.
because
it
the
is.
reality is, who was it? Was it Equifax or Experian? It was one of those two that
I mean,
had a
I know,
massive credit breach.
Equifax had a big
So-
breach. It wouldn't surprise me if others have had it.
It's
too.
a rant for another time that like we're so tied into these credit rating agencies, and yet they have one of the massive, largest data breaches in history.
Yeah.
That put all of our information out there. So the credit freeze, you go to these sites, you put your information in, and you can make it temporary, or you can make it perpetual, or perpetual. You can lift it for a period of time, and this is
You'll
where,
need to if you're going to get a car
Right.
or a mortgage. You have to lift it.
And I've had it happen. I remember one time you're at a store, we were buying, I don't know, a washer or dryer or something. And we went to open a credit card to get, 24 months interest free.
Yeah.
And it was rejected.
Yeah.
And I realized, oh, geez, I got to take the credit freeze off.
Yeah.
So it quickly, like on my phone, went to all three of these agencies. You can lift it for a week. So I lifted it for a week. Went back. They ran the credit. All good.
And then after that week, the credit freeze goes automatically
goes
back
back on. It's very important to have one of those in this day and age.
And it's free. That's where it's a pay. Yeah, if you're at TJ Maxx and you're going to save the 20% on whatever purchase it is, and you have a credit freeze on, I mean, they're not going to be able to run your credit. But that also prevents someone else from being able to do that for you.
Right.
So it's something where protect yourself. It's free. It's a couple minutes of your time. If you're a couple, you want to do it for both of you, not just one of you.
Yeah.
And you will create a PIN. You'll create a login. Don't lose the information.
Save it.
You will need, and I don't know which one of it, but one of them has a PIN that you have to type in. Without that, you're not going to lift your freeze. So make sure you keep that information in a spot where sometimes I put things in there like, I'm going to put it here so I don't forget about it. And then what happens is I forget where I put it. So do your best to not do that. It's important, but it's also a really easy and free way to protect yourself.
Very worth doing it, because the downside to that is you don't do it. Someone opens a credit card in your name. You don't know about it.
Yeah.
They run the balance up, basically max it out, make no payments.
And they're not going to make payments for you.
No.
So there goes the
No.
number one part that, two most important parts to your credit score. Pay your bills on time and keep a balance below, a particular threshold for your available credit. So someone's running up a balance, not making payments, and running up a hefty balance, well, your credit score is going to take a hit.
Yeah.
And that's very difficult to reverse after that's been happened.
That's
or
the
after
other
that
part,
has happened.
is the dispute on your credit report is not easy. It
In
is
time,
not,
you'll iron it out, but it's going to take you a while.
and
it's
it's
going to
not
be a major
something
headache.
as simple as you're not getting this done in one phone call.
No.
Saying, hey, this happened. It takes a while. It takes a while for it to fall off of your credit report. And so some action items here. What can you do? What should you do when we stop talking?
Well,
And
one,
end this
go
podcast.
get your free annual credit report. See what's going on. See if there are
Right.
tips for areas that you should focus on to be able to raise your score if you're not in that good to excellent range.
Annualcreditreport.com. Keep in mind, it is your responsibility to dispute any claims. After you're looking through, and you might say, well, that's not me. That credit card, I never opened that.
If something looks
Or-
off, dispute it.
That credit card I paid off and it shows a balance. You would want to dispute this. Most credit cards will provide your FICO score. And what the FICO score is, it's essentially an average of the scores that TransUnion, Experian, and Equifax are putting out. Monitor it. You can also, a lot of them now have very handy ways that it'll say, you can say, well, what if you reduced your debt by $2,000? How would that increase your credit? How would that impact your credit score?
Yeah.
So there's a neat little, there are a lot of good simulators out there, and then protect yourself. Set up a credit freeze.
Go to all three. Equifax, Experian, TransUnion. Do it. It'll be a little bit of a headache, but you're going to sleep at night knowing that no one else is out there opening accounts and credit cards in your name. It's good to do. It's free, and it's worth it.
Absolutely. And so on that, we are all done with credit reports and managing your credit. So again, if you've enjoyed what you've heard, you found value in this, please leave us a review.
Click on subscribe.
Share it with someone that you know and love, because you know this will help them along their own personal journey to financial wellness. Any
Yeah.
final thoughts?
No.
Good. Great. Wonderful. Thanks for being with us on Wade into Wealth.
See you next week.